Hey, what's going on, guys? What's going on? Street Trading here again with another trade lesson video for everybody looking at a 15-minute chart of DNMR, DNMR Scientific Basic Materials Sector. Let's get into it. So as you can see, these guys are bleeding out. They've been bleeding out for a few months now. Obviously, all pops are getting absorbed. Sellers are absorbing these kind of bull traps and selling into it, and it's pretty technical. On a technical standpoint, you see it time and time again. When a security is under some pretty decent sized selling pressure, you're always going to have these pops, right? So basically these pops are just better positioning for the boys to unload. So whenever you see that and these pops are getting absorbed, this is something you can risk off of, obviously, for a longer term, or if you're looking on an intraday level, it can kind of set you up for the session, right? So you're going to see these sell-offs. You can see the bounces. You can see lower highs printing, continue selling, taking out lows, printing new lower lows, rinse and repeat, rinse and repeat. So this has obviously been selling off going into yesterday's pre-market. It took out some levels. This is the thing, when you have a security under pretty heavy selling, key levels where price couldn't penetrate to the downside, once they do get penetrated, usually volume steps in and you can have some pretty decent sized cliff diving. So these are levels you can kind of look for, build your trade idea around, and then execute on that idea once price does penetrate these particular levels we're talking about. So let's get into how we took this thing down. We ended up scaling into it and needed to respect the bounce, but once it did confirm that we're going to have some more selling pressure, then obviously it was off to the races. We had a pretty decent size trade to the downside once we were full size. So the bounce that we had at the 21 was very, very highly predictable level of pivot, right? So let's talk about the reason why it ended up getting bounced from 21, and also on top of that, why, right? That's more important, right? You're gonna obviously have these levels of targets that you want to start to pay yourself, and high probability you can have a decent sized bounce. But more importantly, what's the idea behind it? Why are price getting rejected? Why is these zones holding? There's reasoning, guys. It's not rocket science here, right? It's not rocket science. It's more of a rinse and repeat type of way to pay yourself, way to focus on and stay in the saddle, right? Because there's always going to be that fuckery going on when price is fading, trying to shake you out, right? So stay in the saddle, understand where price is going, that magnet we always talk about, and then take it down, guys, all right? Your job is to extract as much as possible from the trade. All right, guys, let's get into details and levels we risked off of, and the management of the position. All right, let's get down to business here, guys.